Okay, so I've discussed with you people the basic concept of relevant costing or the relevant cash flows. I'll do a few more discussions and then we'll go on to discussing the examination question on the relevant cash flows. Now, the next aspect of this relevant cash flow is the first thing that we would talk about is we would talk about the relevant cost of material. We would talk about the relevant cost of material. Now, whenever you establish the relevant cost of material, the first question that you ask to yourself is that whatever the material that is available to us, is this material of regular use? Is this material of regular use? Is it being regularly used within the organization? So if the answer is yes, if the answer is yes, that is, if you have got material available in the warehouse and that material is regularly being used in the organization for the regular manufacturing and production and whatsoever, and if you use this specific material for the production of XYZ item, so what would happen is you would have to replenish additional material in the warehouse because this material was not an extra or a surplus material in the warehouse. So always remember this thing, that whenever you have got a scenario where you are being told that the material which is available for regular use, that the material is used regularly, so what you would do is that you would say that the relevant cash flow is, I repeat, the relevant cash flow or the relevant cost of material is going to be the current replacement cost. So I repeat, when we talk about a material which is used, I repeat, which is used regularly. So what would happen is you would say that the relevant cost of this specific material is the current replacement cost. And if the material is not regularly used within the organization, then what happens is your relevant cost is your opportunity cost. That is, what are you going to lose if you utilize this material? I'm taking an example. I'm assuming that you are being given an order. You need to manufacture a specific product and you need to establish that what is going to be the relevant cost of material. So if you need to establish this, the first thing you need to do is that is the material that is available within your organization, is this material of a regular use? If the answer is yes, then the current replacement cost is going to be a relevant cost. And if the answer is no, then your opportunity cost, that is the lost opportunity or the contribution that you will lose out if you're going to be using this material. Now, what is it going to be? Let's just see. The opportunity cost is the higher of. The opportunity cost is the higher of. Higher of what? The opportunity cost is the higher of scrap value or the benefit from alternate use. I repeat, what is the opportunity cost going to be? The opportunity cost is going to be the higher of scrap value or the benefit from alternate use. Now, what do we mean by this? Let's try to discuss and understand. Okay, now let's just see. So what do we mean by this scrap value, or what do we mean by this benefit from alternate use? Let's try to see, let's try to understand. If we talk about the scrap value, the scrap value is what? The scrap value is your disposal value. That if we are going to be disposing of this specific material right now, what is the price that we would get? And what do we mean by the benefit from alternate use? So for this, try to understand this. we have a material available in a store. Um, you could modify this material at a cost of, let's say, $3 per kg. And once you modify it at a cost of $3 per kg, so what would happen is that the alternate material that you buy from the market for $10 would be avoided. I repeat, what happens is you have got a material available in a store. It's an excess material. It's a surplus material. Um, this is of no use for the entity, but what the entity could do is that the entity could modify this material. The entity could modify this material, and after the modification of the material, what could probably happen with respect to it is that the entity could avoid purchasing another material which is worth $10 per kg. So as a result of this, what would happen is the maximum benefit that you would get from this alternate use is going to be the cost which would be avoided is going to be $10, and the extra cost which would be incurred is going to be $3. So resultingly, net $7 is going to be the benefit that you would get. I repeat, resultingly net $7 is going to be the benefit that you would get. So what is this $7 benefit going to be? This $7 benefit is going to be what? It is going to be, I repeat, it is actually going to be the opportunity. I mean, like it is the benefit that you're getting from the alternate use. Okay, so whenever we talk about the relevant cost of material, this is something that we keep in mind, that how exactly do you establish the relevant cost of material. What I'm going to do now is that I'll open up few of the MCQs, and I would actually be going through those MCQs in order to help you people enhance your understanding with respect to the relevant cost. So this is one of the MCQs in the Kaplan revision kit, which is question number 42 of the Kaplan revision kit about UU company. What I would want you people is that the question's requirement is, it says, what is the relevant cost of the material for the special contract? Let's try to attempt this and then we'll discuss. Okay. If I talk about this question, the name of which is UU company. So what is actually going to happen with this question? Try to have a discussion, try to have an understanding. Basically what happens is, if I talk about this specific question, it says UU company. What is it? It says UU company has been asked to quote for a special contract. The following information about the material has been given. Material X, book value is given, the scrap value is given, and the replacement cost is given. It says contract required 10 kgs of material X. There are 250 kgs of this material in inventory, which was purchased in error over 2 years ago. So this material is there, 250 kg is available, and only 10 kg is needed. It says if material X is modified, so and so, so and so. Now, you see, what happens is the first and the foremost thing is that you need to first of all ask a question to yourself, that is it a regular use material? The answer is no. The answer is no. So what happens is, if the answer is no, so that means the relevant cost is going to be the opportunity cost. And the opportunity cost is going to be the higher of. The opportunity cost is going to be the higher of what? The scrap value. What is your scrap value? The scrap value is zero point 0.5. And what is the alternate use? So if I talk about the alternate use, try to understand. It says it could be used as a substitute for material Y. If X is modified at a cost of 2 per kg, it could then be used as a substitute for material Y, which is in regular use and currently costs 6 per kg. So basically what happens is the cost saved would be $6. The extra cost incurred would be $2. So resultingly $4 is the benefit that you can get from the alternate use. Resultingly $4 is the benefit that you can get from the alternate use. So if the $4 is the benefit that you can get from the alternate use, so you would say that the opportunity cost is $4. And if the opportunity cost is $4, what is going to happen is $4 multiplied by 10 kg gives you $40 as the relevant cost. What is it going to be? It's going to be $40 as the relevant cost. Is this okay to you all? Yeah, is this okay to you all? Okay, let's move on to the next question. The next question is this question number 44. Let's try to attempt this question, then we'll start discussing. Okay, so now in this specific question, it says an organization is considering the cost to be incurred in respect of a special order opportunity. The order would require 1250 kg of material D that is readily available and regularly used by the organization. So the concept is it's regularly used by the organization. There are 265 kgs. Now remember, if the material is of regularly used, so your relevant cost is going to be your replacement cost. So it says there are 265 kg in the inventory which cost this. Ignore that. You need to consider the current market price, which is 3.24 per kg. So if you need to consider the current market price, which is going to be 3.24 per kg, you would say 3.24 multiplied by 1250. I repeat, what is it going to be? 3.24 multiplied by 1250. So 1250 multiplied by 3.24 gives you 4050. What is it? It's actually going to be 4050. Now, if we talk about it to be 4050, what is the relevant answer? It's B. Now let's move on to question number 45 and discuss this question 45. If I talk about question 45, it says an entity has an inventory of 15,000 kg of M, a raw material which is bought for $3 a kg 5 years ago. So it's actually a past cost. This is actually a past cost for a product line which was discontinued 4 years ago. M has no use in its existing state but could be sold as a scrap for 1 per kg. So the material is not of regular use. There is no regular use. The scrap that you can get is $1. It says one of the company's current products, HN, requires 4 kg of a raw material available at 5 per kg. M can be modified at a cost of 0.75 per kg so that it can be used as a substitute for this material. However, after modification, 5 kg of M is required for every unit of HN to be produced. So now, if I say that the cost of HN, which is 4 kg of HN each at $5, $20 is going to be saved. The extra cost to be incurred is going to be 0.75 into 5. The extra cost to be incurred is 0.75 into 5. So resultingly, this is going to be 3.75. And hence what happens is this is going to be 16.25. If this is going to be 16.25, what is actually going to happen? The next thing that is actually going to happen is that you would simply say that 16.25 is the benefit that we would get. you would get for using what? 5 kg of M. So if it is going to be 5 kg of M, resultingly $3.25 is the benefit per specific, is $3.25 is going to be the benefit for a single kg of M. So resultingly, what is your answer going to be? Your answer is going to be what? Your answer is going to be 3.25 per kg. Now, so what is the relevant cost of M to be included in the cost estimate? It has to be $3.25 a kg. Let's move a bit forward. Let's talk further. We now have got question number 46 in front of us. So what is it in question number 46 that we need to cover up? Let's just see. Kindly go through it and then I'm going to start discussing. I'm giving you 2 minutes time. Kindly go through it, please. Okay, so let's talk about this question. It says that if in order to utilize some spare capacity K is preparing a quotation for the special order which requires 2000 kg of material J. So what is the K doing? K is actually preparing a quotation for a special order which requires 2000 kg of material J. K has 800 kgs of J in inventory. Original cost was this. Material J is used in the company's main product L. So if it is regularly used product, that means you need to go for the replacement cost. Each unit of L uses so and so, so and so. You need to ignore all of this. All that you have to cover up is 2000 kg into $8, which is the current market value, which is the current market value of the present replacement cost, gives you $16,000. That is what the relevant cost is going to be. I repeat, that is what the relevant cost is going to be. Now, let's move a bit forward and discuss further. We have got question number 47. Let's talk about this question 47. What does it say with respect to question 47? It says that a company is calculating the relevant cost of the material to be used on a particular contract. So what is it trying to calculate? The relevant cost of a material to be used in a particular contract. The contract required 4200 kg of H, and this can be bought at this rate. The company bought that 10,000 kg some time ago when it paid this much per kg. Currently 3700 kgs. What is it available? You currently have 3700 kgs available. So it says currently 3700 kgs of this material remains in the inventory. The inventory of H could be sold for 3.2 a kg. What could it be sold at? At 3.2 a kg. Now what next is there? The next situation is, it says that the company has no other use for H other than of this contract, but it could be modified at a cost of this and could be used as a substitute for J. J is regularly used by company and can be bought for this. So what do we need? We need 4200 kg of this 3700 kg is available. The remaining 500 kg is going to be bought from the market at 6.3. The remaining 500 kg is going to be bought from the market at 6.3. So this is going to make it $3150. So I repeat, what is it going to be? It's going to be $3150. Now what next is there? The next aspect of it is going to be that of the 3700 kg which is in inventory, it says that the company bought 10,000 kg of H some time ago. Ignore that. Do we have the scrap value? We have the scrap value at 3.2. The benefit from alternate use is what? 7.5. The benefit from alternate use is what? Is 7.5 less 3.7. So it's actually going to be what? 3.8. I repeat, what is it going to be? 3.8. So your relevant cost is going to be 3.8. So the rest 3700 kg is going to be at 3.8. So resultingly what happens is 14,060 is what it is going to be. And 17210 is what the relevant cost of material is going to be. I repeat, 17210 is what the relevant cost of this material is going to be. Okay, let's actually go through another specific thing. Let's just see if we have got any other relevant cost of material. Yes, this is the last question with respect to the material, which we need to go through. So question number 53, kindly go through it, please. Okay, now it says XPLC intends to use relevant cost as the basis of the selling price for a special order. The printing of a brochure. The brochure requires a particular type of paper that is not regularly used by XPLC. So that is something which is not regularly used. Although a limited amount is available in XPLC's inventory, which was left over from a previous job. The cost of XPLC bought this paper was this. So this is a sunk cost. This is irrelevant. And there are 100 reams in the inventory. Brochure requires 250 reams. The current market price of paper is this, and the resale value is this. So what happens is you have got 100 reams available and the resale value or the scrap value is $10. Remaining 150 reams, because 250 reams are required, each of the ream is available in the market for $26. So resultingly what happens is 100 into 10 gives you $1,000 here, and 26 into 150 gives you $3,900 here. So resultingly $4,900 is going to be considered as your relevant cost. So $4,900 is going to be your relevant cost. So what we have done now is that we have actually gone through the relevant cost. We have actually gone through the relevant cost of the material, that how do we establish relevant cost of material, and what are the different type of questions that could be examined in the MCQ form pertaining to the relevant cost of material.